So in the last video, we looked at when to exit trades early. What happens when you've got valid setup, clean execution, and then price is just not doing what you expect it to do? It's not then following through on maybe a confirmed accumulation, manipulation, distribution, where you might be in a trapped AMD. So I want to tell you exactly what that means and then look at an example on EURUSD and how we could have actually traded this and turned it into a high probability trade. So first and foremost, what is a trapped AMD? So when we think about AMDs, we have accumulation, then we have manipulation. Then our distribution candle is targeting the opposing end of the range. So a trapped AMD is where a valid AMD setup appears. However, the macro timeframes above the AMD disagree with each other. So this creates a conflict that impacts trade management. So to bring that to life, let's look at this visualized. So let's imagine these are two time frames. One is, say, the 12-month time frame, and two is the 6-month time frame. So on the 6-month, you see that price accumulated, then we had manipulation. Price traded in to the high of this previous candle range. Then it closed inside the range. So this looks like a massive macro bear opportunity because price might, in the next 6 months, want to target the low of the accumulation candle. But what's the 12-month just printed at the exact same close point? A higher candle. So what the 12-month is saying is we want to go higher. What the 6-month is saying is we want to distribute lower. So they are in conflict with each other. So if you're looking for shorts here and price is not doing what you expect it to do, it might be telling you, actually, we just want to go higher. So that's what we're going to look at on EURUSD right now and just show you what you just always need to have in the back of your mind when you're analyzing price action, because it might be that this is telling you the actual story. So instead of looking at the 12-hour right now, because I just want to make the point, we're going to just look at the weekly candle, and I'm going to show you how the higher time frames, 6-month, the 12-month, actually interact and how we can actually use that to take high probability trades. So first and foremost, let's look at the 6-month on EURUSD. So what you can see is that over this 6-month period, huge 6-month range, we had a massive accumulation. So at this candle close, we are expecting higher prices, which we get. But then over the next 6 months, we actually have manipulation. So a lot of accumulation in this price action, ranging price action, which is difficult to trade. But ultimately, what this 6-month does is it manipulates the previous 6-month range. So now, at this point, what we might expect to see is price has liquidated the high and now is going to shift in our favor and then dump to the opposing end of the range. So that's the 6-month story. And if you filter down the time frames, the 3-month, the 1 month, it was sort of saying the same thing. But this AMD is ultimately trapped, and I'm going to show you exactly why. So let's bring over the 12-month time frame. I can even take the 6-month away for a second. So the 12-month is saying something very different. We had this 12-month candle, we had price trade below and then break above and close. So actually this is saying, no, we're not going to distribute to lows down here. This is actually now an order block. This is a 12-month order block. So price, yes, might want to retrace. But ultimately, we want to go higher. So if we're looking at any AMDs on lower time frames, they're ultimately trapped. We're not saying that, or I'm not saying that price isn't going to retrace. It might respect the lower time frame AMD. However, if you're seeing in your price action something that is not playing ball as you'd expect, it might be just a sign that we want to respect the highest time frame macro. So if we now bring this back to, say, the 12-month time frame, let's imagine right here that we're going to see, just mark the 12-month time frame here. We have this as our high of our, I'm just going to take these away. So this is the high of our 12-month candle right now. So as price is starting to retrace here, we're obviously looking for shorts first and foremost because we have 6-month context. If I bring up the 3-month as well, just to show you this, you can see we also have accumulation, manipulation, and in this point here, we're sort of thinking, okay, we're at least going to distribute to this low, or maybe to this low here. So that's what we're targeting on the 12-hour. So if we take away the 12 months, because we've marked here the high of the candle already, and then we bring up our usual time frame. So I'm going to say monthly time frame, and then let's do the weekly time frame. Okay, so as price is starting to retrace here, you can see that we are respecting the 12-hour structure. So price trades below, trades in, lower, in, lower. But then we get this breakout right here. So this is not what we'd expect to see. If we were expecting distribution to the lows, then we would be looking to take trades in this structure to go lower. But what happened? Price actually just disrespected and broke above. So as soon as we see that, we can then think, okay, maybe price does want to go higher. If it's going to go higher, where is it going to go higher to? And this is where you then refer back. Okay, this is a trapped AMD. We actually have a higher time frame target, which is the 12-month just going higher. So then you have this becoming your higher time frame target. Then it becomes so easy to trade this, because you just then play the internal range liquidity to the high. So first trading opportunity would be, we have a bullish 12-hour price leg and we have a fair value gap. So where is the fair value gap? Let's just mark that right here between candle 1 and candle 3. Then we get a new price leg higher, and in this price leg we have a order block, 12-hour order block right here, the last sell to buy, and we have another fair value gap. So this is a new price leg higher. We have a higher time frame context. Everyone in here thinks we're dumping, and price is just going to run all of this liquidity straight to the high. So trade 1 would be from the fair value gap, maybe covering the liquidation point here, 2.2R, trade 1. Trade 2, you could just take the order block right here, cover the swing point, same target, 2.36R. And they both play out perfectly. And they played out because this was a trapped AMD. There was a lot of liquidity trapped by the fake signal from the monthly, from the 3-month, from the 6-month. And the 12-month just told the story. Price wanted to go higher. So in conclusion, what I am saying is not to trade AMDs that form because there is a higher time frame trap. It's not what I'm saying. If this is being respected, trade it. But as soon as we see disrespect and unusual price action, look up, because it's probably a trapped AMD, and that's where you can then flip your bias to take high probability trades. And you protect yourself with everything we've discussed in this series, which is fixed risk management and knowing when to exit and when to stay in trades through valid or invalid retracements.